All right. Welcome, everybody. Thank you so much for joining us today. Today, we are with Jeremy Bickler, VP of Sales at NIW, discussing Kaizen, a strategy to bring additional value to your clients. Find out today how you can help clients achieve 60 to 100% more income in their retirement by using smart leverage and get insight into their paperless marketing platform. Jeremy also trains IMO sales staff and individual agents on using leveraged IULs for estate planning, supplemental income solutions, and more. With that, I'll let you take it away, Jeremy.
Thank you. And thank you, everybody, for your time today and our partners at NFI Solutions. So before we get started, what's important foundationally is who is NIW? Well, the industry would refer to us as a premium finance vendor. What does that mean? That means that we partner with organizations like NFI Solutions for leveraged life insurance situations. We bring in the banks, we do the designs, and we're essentially a third-party administrator to do policy and loan servicing on those policies until those lenders are paid back. We have several platforms, but the one, as was mentioned in the intro, the one we are going to talk about today, which is far and away the most popular and far and away what we are known the most for, is Kaizen. We were established in 1999, so we're going on our 25th year. We have over 6 billion in force now. We are known, and we'll talk more in depth on this throughout the presentation, our stress testing for all designs. We don't just use pie in the sky, things that look good on paper, if you will. And as reported by our banks, as well as our partner life carriers, we do have the highest persistency rate in the industry. And as of last January, we are a fully owned subsidiary of Simplicity Group. So when we talk about Kaizen, it is a max fund IUL strategy. So yes, it's life insurance. Yes, it provides death benefit. But the primary objective of the Kaizen, the individual purchasing Kaizen, is an income stream. So we're doing that life insurance retirement planning strategy, but we're going to utilize leveraging on top of that. So since we know this is an income play, why did we develop Kaizen? So we'll talk about a situational analysis here as far as individuals and income and retirement planning. The average US citizen saves at a rate of about 3 to 5%. So the average US citizen is setting aside 3 to 5% of their income for retirement planning. If we expound on that a little bit and say the top 10%, and by the way, per the data, that's roughly individuals making above 200,000 a year, they're saving at a clip of 9 to 12%. Here's where the problem lies, though. It is not whether these individuals will retire. It is more along the lines of, are you going to maintain the standard of living you're accustomed to and through retirement? I will use myself as an example. Excuse me. I'm 49 years old. I've got a senior in college. I've got a senior in high school. I'm a former business owner. I was not saving as much as I should have been throughout my 30s. So when I input a boilerplate retirement model, like I want to retire at age 67 and I want to retire off of 80% of my income, and the average stay in retirement is 22 years. This is where a lot of people find themselves. Again, it's not about whether they will retire, but will they be able to afford to have the same lifestyle in retirement they're accustomed to? And what is not uncommon, and this is not unique, is you'll find yourself in a situation where I need to be saving at 25, 30, 35% in order to achieve those goals. Now, I think we'd all agree it's ridiculous to realistically ask a client to set aside 30% of their income. It's not feasible. This is specifically what Kaizen is designed to address. We feel the issue is there is a fundamental shortage of capital. A lot of the even AUM guys out there, they all kind of sound the same in terms of, I can get you a better rate. I can get you a safer yield. Of course, all of that's important, but they're not addressing the fundamental issue, and that's there is a shortage of capital. I mentioned this, people saving at a clip of 9 to 12%, making above 200,000. There's 12 million of those households in the US. 90% of them are under saving. Again, it's not about whether they will retire. It is about, will they be able to preserve their typical quality of life that they're accustomed to? Kaizen is a hybrid financing program. And a lot of people here, I should mention this, when you hear the words premium finance, I'm sure that many of you, especially if some of you are accustomed to it, you may even be averse to it. And the words premium finance may cause you some trepidation. Of course, we understand that. I will ask all of you to take a step back and look at this through a little different lens. That's why we call it a hybrid financing program, because there is some things that fundamentally make this different than any other platform out there. But specifically, this platform is designed to solve that underfunding of supplemental retirement plans. So we're going to interject capital into the platform for those individuals. Here is where Kaizen starts to separate itself. So again, it's for typically ages 35 to 65, annual income above 200,000. If you're a business, it could be for recruit and retain. So we're going to target that concern regarding maintaining a quality of life to and through retirement. And if you're a business, you could utilize this to recruit, reward, retain the recruitment and retention of that top talent. So I've mentioned this now, asking you to look at this through a different lens. What makes Kaizen different from a traditional premium finance platform? And why am I calling it a hybrid finance platform? First and foremost, there is no loan underwriting. There's no financial credit checks. There's no loan documents to sign. There is no interest payments, and there is no personal guarantees. All of this goes out the window where other traditional financing programs require the clients to be underwritten for the loan. They're signing loan documents and personal guarantees just like they would if they were purchasing a house. So what makes it different is at the end of the day, it is a 10-pay max fund IUL, but the client is paying roughly half of the premiums years 1 through 5. So if you're looking at the piggy banks on my screen here, the yellow piggy banks there are the client's contribution. So in this case, in this example, this client is paying $34,000 a year, years 1 through 5. We're leveraging another $31,000 on top of that. So again, going back to my discussion about injecting capital into the equation, we're using other people's money. So instead of just a $34,000 a year 5-pay, there's another $31,000 plus going into the policy. Then at the end of the 5th year, your client is done. Your client's out-of-pocket obligation is now complete, and we are going to leverage another 5 years, all of the premiums. So essentially what this is going to be is this is roughly a $65,000 a year 10-pay IUL. However, the client's only paying 34 years 1 through 5. So we're leveraging 3 to 1 on top of your client's money. So another way to look at this, and Americans do this every day, let's say I want to purchase a house. If I have $100,000 in my pocket, cash, of course, that's not going to buy you much depending on where you're at or where you live. But instead of looking for a house for 100 grand, I'm going to put that 100 grand down and I'm going to look for a house for 400,000, 500,000. I'm going to buy a bigger house, a better house, one that more suits my needs. That's exactly what we're doing with Kaizen. However, we flip the script a little bit in terms of what would typically be required. So when we don't concern yourself with the numbers on here, just know that if we're talking about what would be traditional premium financing, not Kaizen now, the red line there would be a typical loan. That would be the bank loan funding the premiums. And the blue line would be the cash value. Even if I stress test that, you're still seeing that ultimately the red line is higher than the blue line, meaning that the bank loan is bigger than the cash value inside the policy. With traditional premium financing, your client is responsible for that. They have to post a liquid asset as collateral. We completely turn that upside down with Kaizen. Now with Kaizen, you see the policy cash value is higher than the loan balance. So instead of the loan being bigger than the policy cash value, you see the blue line is now bigger. So instead of a shortfall, there is in fact a surplus. So the policy itself is the collateral on the loan. So this is where I was saying earlier, there is no credit checks. There is no personal guarantees. Your client is not signing a loan agreement with the bank. They are simply agreeing to pay X amount for 5 years. And then we are going to leverage roughly 3-to-1, depending on your age, on top of that. How this works is ultimately we set up a personal trust for your client. Now, you do not, this is turnkey for you. You do not need to get your attorneys involved, your client's attorneys involved. This is what we do. Once your client gets through underwriting and they're approved and they decide to move forward, what we're going to do is we're going to fund your client's policy at the same time as roughly 100, 150 other policies. So we're going to a lender with millions of dollars. So what this does is it allows bundling for loan prices. It reduces lender administration. There's critical mass achieved. And it's control and risk insulation for your client. One of the analogies I will use with this is if any of you have ever been to a bowling alley, especially when there's kids playing and bowling, they have gutter guards up, right? That's exactly what we're doing here. Now, when you have those gutter guards up, you're not guaranteed a strike, but I can bracket my risk. I know I'm not going to hit a gutter ball. That's exactly what we're doing with this platform, is we're allowing you to use leveraging, which is what we do every day as Americans, right? Whether we're going to buy a boat, buy a motorcycle, home improvement projects, commercial loans for our businesses. We utilize leveraging every day. And we've been doing it with life insurance, but not in a way as risk averse as this. So let's look at some of the data that our carrier partners have actually told us. Because as I mentioned, we've been, in the business now for 24 years. Kaizen's been around over 11 years. So we have over $1 billion in force right now. Statistically, depending on your client's age, it's going to yield 60 to 100% more income than if they just funded a straight IUL with no leveraging. The probability of them doubling their income is 80%. The probability of same or more income is 93%. And the probability of hitting those goals that we talked about at the beginning has improved 6x. Now, one of the things we're known for on top of this is how conservative that we are. We are not going to simply try and make something look good on paper. And we provide the education and transparency behind that because we are adding risk. So what we do, every Kaizen design is based on a specific fund ratio. And that is going to depend on your client's age, your client's gender, your client's rate class. It's always going to be max funded minimum death benefit. And it's always going to be a 10-pay with your client paying 5 years of the premiums, roughly half, going back to that piggy bank analogy that I showed you. We have two risks, essentially. Number one is market performance, because we're using an IUL. Even though it's got a 0% floor, there still is risk. So rather than just making stuff up, what we said is what's the worst period ever in the U.S. history for market performance? Well, that's easy. That's the Great Depression. That's 1930 to 1945. So we took the actual returns from the composite index, 1930 to 1945. To give you some idea there, the IUL would return a 0% 9 of the first 12 years. So 9 of the first 12 years, your client gets a 0. By comparison, 401k accounts would have lost 90% of their value. House prices in New York would have fallen over 65%. Every Kaizen design has to pass the Great Depression scenario. The other risk we have is we are borrowing money. Even though your client's not on the loan, we are using leveraging dollars, and we're going to use the policy to pay that bank loan back. So again, same scenario. Instead of just making stuff up, we said, well, what's the worst period ever in US history for borrowing? That's 1980s interest rates. To give you an idea there, the peak, we were borrowing as high as 18+% during that time frame. Our carriers have actually found that this test is probably 15 to 20% too conservative, but we left it. The bottom line, what I'm trying to show here is every Kaizen design that you will show your client has to pass both Great Depression era for market performance and 1980s borrowing rates. If it does not, we reject the design. So what we're talking about is a conservatively designed leveraging strategy that we start with underperformance. So we're not just going to go into the carrier software and kind of floor it, so to speak, and see how good we can make something look on paper. We're going to throw 1980s interest rates and Great Depression era returns at it at the onset and make sure it passes those first. So it's actually under leveraged from that standpoint compared to what other platforms would be. It requires less than half of what the historical performance would typically require for a premium financing platform. And if we're looking at, kind of a risk profile here, we've got bonds, we've got a typical IUL platform, we've got stocks and margin loans. You can see Kaizen kind of slides right in there in between what would be your typical bonds and stocks platform. And as we all know, that 60-40 stock bond split continues to be challenged. So what we're saying is this is not instead of, this is in addition to, as a diversification tool, what your clients are already utilizing. So again, what makes this platform different is there is no direct liability on the client outside of payments that have already been made. Your client is agreeing to pay X amount for 5 years and we'll design the case from there. Because of the stress testing and because we're not borrowing all the money, it is structurally not able to have a negative cash value. The policy itself is the collateral. The banks cannot legally go after your client because they're not signing loan documents. It requires half or less of the required performance. It is extremely resilient, starting with those stress test assumptions that I went through. And again, these are independently verified claims. I'm bringing in our bank partners that have been doing this, our carrier partners. This is not just NIW as the administrator of the plan talking about a quote unquote, does this work? That is essentially what Kaizen foundationally is designed to do and what makes it different. Now, as far as you, the advisor, and how you can integrate this into your business, we have developed a platform that is essentially, it's called ILIA. ILIA is just an acronym, Interactive Learning Information Assistant. This is your online tool, your home for Kaizen. It's going to expand your reach. It will help you improve your closing efficiencies. It will eliminate any of the time-consuming paperwork that you typically will see with life insurance, and it reduces your overall processing time. Now, because NFI Solutions is a preferred IMO partner with NIW, you all will have access to this at no added charge. There's no subscription fee. We don't increase our splits. This is a platform that you have available to you. So with that being said, I'm going to bring this up. This is what your individual ILIA agent screen would look like. So this becomes your home for all that is Kaizen. So just pointing a few things out. First and foremost, there is a training tab. Everything from, and you can see there's kind of a Netflix feel to this. You can scroll over to the right. Everything from creating your account, navigating the site, how the compensation works, Kaizen videos here, Kaizen for different applications, Kaizen for executives. These are all things, platforms that you can use. There's marketing tools. There's enrollment videos here, talking you through how the enrollment works. There's a servicing portal. once the case is enforced. So this training tab becomes your home once you get access for familiarizing yourself with the site. There is also a marketing materials tab. There's client videos here. These are all 1-2 minute videos here. Some of them are training webinars, but the majority of them are 2-3 minute videos here. Like, for example, Kaizen as an alternative to fixed assets, Kaizen for executives, Kaizen for physicians. You could simply go in here and copy the link and email this, or maybe you're doing social media platforms, or maybe you're emailing to a lead database. So we're going to provide a ton of content here. We do a webinar every Friday that agents can be on, addressing everything from leveraging, mastering the annual review, like the one I did a few weeks ago here. There's client testimonials here. These are all actual video testimonials of Kaizen owners. We have a millionaires club. This is not people that have wrote $1 million in target. This is people that have or on pace this year to earn $1 million+ in commissions from their Kaizen business over the years. So that's another great tab for you. As far as the client goes and how you can utilize this. So let's say you have identified a client that could be a fit for this, and you have an appointment. Maybe they're in your office and you have your computer up. Maybe you're in their home with your laptop, or maybe you're doing exactly what we're doing now and you're screen sharing over the internet. You can go here to client presentation. By the way, the carriers that we utilize for this, that integrate with this platform, they've been with us since the start. We've got billions in force with them. They understand how this works, is Allianz and National Life. And you can discuss that that is between you, your client, and of course, NFI Solutions on the carrier you choose to use there. But we can tell you unequivocally, we have billions in force with each. So let's say you want to present Kaizen to your client. Again, you do not necessarily need to be the expert. What you will have here, once I clicked on that client presentation, is, and in the interest of time, I'm not going to go through everything here, but you've got a 3-minute video here that you could play for your client. This foundationally talks about what Kaizen is designed to address. Then you could go in there to the benefits estimator rather than reaching out to us and having NIW run a design and it taking a half a day or a day, no interruptions in the sale process. Maybe you're sitting in front of a 45-year-old male. I've got a slider bar here that I can go back and forth. Let's say that wants to contribute 50 grand a year for 5 years as an example. I can hit calculate and it will right out of the gate here start visually showing your client how this works. So again, back to the piggy bank story, we're going to take your dollars, we're going to leverage 3 to 1 on top of that. Now, what did that get you? Based on this client, we got an initial death benefit of 1.3 million. Potential distributions at age 65 of over 81,000. Again, remember, per the tax code, that is tax-free distributions through policy loans. If I fast forward to age 90, that will be a cumulative distributions of over 2 million taken from this client, and there will still be over 1 million left in wealth transfer via the death benefit. Based on the client's contribution, that is an internal rate of return of 8.7%. Now, remember, what's important here is this is all tax-free per the tax code, right? It's tax-deferred growth, tax-free distributions through policy loans, and income tax-free death benefit. So depending on your client's tax bracket, insert whatever tax bracket you want. Most likely your client would have to get 10, 11, 12% in an after-tax equivalent to equal that. And by the way, anywhere there is a little blue eye, you can hover over it and it will actually explain what these numbers are. So this is a great tool right out of the gate for you to just real quickly show a client. Maybe you want to get more in depth. I could go in here and actually run a full design, which I'll just do real quickly here. So let's say I have, again, that same 45-year-old, let's make it a female this time, non-smoker. I hit next and I want to maximize the potential distributions. And let's say this client's going to put 40 grand a year in, and there's no employer contribution, it's just a straight out-of-pocket contribution from this individual. This may be a business owner. This may be an executive. This may just be a high net worth client you're talking to that wants to utilize this strategy. I can show when I want distributions to start and stop. Then when I view results, what's happening here real time, this is actually running that 1980 stress test that I talked about. It is running that Great Depression stress test I talked about. It is running an IUL out of pocket for comparison with no leveraging. And then it is running the Kaizen design. So it is essentially real time talking to the carrier's software. So depending on your internet and what you're looking at, you're typically looking around 30 to 45 seconds to actually run a design. So you can be completely self-sufficient as an advisor if you want to get in and actually run custom design. So that's exactly what is happening right now. So what it is actually, this platform has been around for roughly 4 or 5 years now. I've mentioned Ilya has been around for about 11 years, or Kaizen's been around for 11 years. This was an industry changing thing with it's technically using APIs, artificial intelligence, to talk to the carrier and run these things real time while you're looking. So now that I ran that, you can see we can go into your piggy bank story, visually show the client what's going on. I can go into benefits and distributions. Again, it'll show the client's IRR, the death benefit, distributions, cumulative at age 90. And what you actually see going on up here on the top right, it is actually loading the PDFs. Little bit slower today because I'm inside of a screen share platform. You know, when you're inside of a Zoom or some of the other things, it will take a little bit longer. But then once that comes up, I can view the illustration. I can actually view the client proposal. So this is what the Kaizen proposal will look like. I can scroll down. It'll talk about it here. Remember when I talked about earlier about the 1980 stress test, as well as the Great Depression? It will actually show you what the projected income would be in those. Every Kaizen design will do that. It will also compare to a self-fund. And then if I go to the actual design here, let me zoom in for everybody. So this is where you will see this client's putting in 40. We're leveraging another 36 on top of that. Your total premium is actually 75. And this is kicking out a projected in the bottom right here of 71,000 a year. So this platform, again, at the end of the day, will allow you to present Kaizen, gather any marketing materials that you need as well. Now, I can continue on here now and talk more about what this platform will do. Over here on the left, if I click Financial Solutions, depending on what it may apply to your client, you know, Mr. and Mrs. Client, we talked about how you haven't been accumulating enough. You started saving late. Well, Kaizen's going to utilize leveraging to take care of that. If you're concerned about taxes, again, per the tax code, the underlying IUL provides tax-free distributions through policy loans. If you're concerned about medical emergencies, again, this says the carriers have chronic illness riders and or critical illness riders. If you're concerned about market declines, we can address that because of the 0% floor. Here's a fun one. I mentioned earlier we set up a trust for your client. It is a Nevada trust because the trustee is Provident. And by the way, you can write that down, Provident Trust Group. Their fiduciary responsibility is to take your client's money and the borrowed money, pool it together and send it to the carrier. I think they have about $4 billion in force. They're one of the largest fiduciaries of life insurance in the country. But why I'm bringing this up is because it's a Nevada trust with a Nevada trustee, it's a Nevada sale. Life insurance, cash values, and death benefits in Nevada are free from creditors. So you also get an added benefit with this as well, some creditor protection. And I mentioned this earlier, if you're just looking for diversification in addition to what a typical stock bond split would be, you can even go in and talk about an IUL 101, what we're doing here, how we're max funding an IUL. You could talk about how the annual reset design protects you. You can participate in market growth up to a cap or participation rate. Each year's gains are credited and compounded, unlike paper gains in a mutual fund. But more importantly, when you do go backwards, each year's gains are locked in. So this, you can explain kind of indexing 101. This talks about how caps are the cost of a 0% floor. And this just continues to hammer home how that 0% floor is going to protect your cash value against market declines. We're going to take that platform and we're going to add leveraging to it. Again, the familiar piggy bank story here. This is hammering home that it's smart leverage or leverage made easy, no interest payments, no loan docs, no credit checks, no personal guarantees. We're going to continue with the animations here. Depending on your age, we're going to get you anywhere from 60 to 100% more than if you were simply funding the policy on your own. You can even go through our stress testing here. Every Kaizen design has to pass 1980s interest rates, has to pass Great Depression era returns. You can go through the plan details. There's a frequently asked questions portal here. Again, this is a living, breathing document. Everything from contributions to questions on the loan, to what ifs, to distributions, to trust questions. Everything you need is in here. So this essentially, your guide here is a front to back presentation for you to discuss with your client. Now, one of the things we know post-pandemic is when you get done with that appointment, your client is going to go Google Kaizen and premium finance and all those things. 90% of due diligence now for major financial decisions is being done online. And that's, don't take Jeremy's word for that. That's, Insurance Selling, Harvard Business Review. There's tons of studies on this. And this is across generations, by the way. I don't care if we're talking about boomers, if we're talking about Gen X, millennials. 90% of due diligence for major decisions is being done online. So what you're going to be able to say to your client is, would you like access to this? You want to provide them the platform to educate themselves. So what you can do then is you can go to the top, return to your dashboard. So then once you are back on your home screen, you can hit create invitation. There's basic questions here you're asking, your client's name, phone, email. It's asking for household income to make sure that, excuse me, you are not sending to people who do not qualify. Once you fill in the client's contact, this gray send invitation at the bottom will turn blue and you can hit send invite. Once you send that invitation, they will show up in your client management. So whether you send out 1 of these, 5 of these, 20 of these, they will show up in your client management. So I sent myself one, as you can see. That's why it says Jeremy Bickler here under my client management. So let's just say I'm the advisor and I met with this Jeremy guy a couple days ago. I want to follow up with him and see if there's any questions. But before I follow up with him, I can go into my client management and I can click on this, go to participant status, and it will tell me if that client has opened the invite. Did they create an account? Have they started enrollment? Maybe this is an existing client of mine. I can go into enrollment details and I can start pre-filling some of the information out. And then when the client does ultimately click on your email and log in and create their own account, those enrollment questions will be pre-filled for the client. The client will still eventually have to click on that email and there will be a big green enroll here button or click to start enrollment. So what this platform event is actually doing is it's your home for marketing. It's your home for presenting. It is your home for training, and it is your home to enroll your clients 100% paperless into their Kaizens. And again, this platform is free of charge to you because NFI Solutions is a preferred IMO partner with us. To get started with this, we just have a basic selling agreement. It's basically a boilerplate NDA that goes through our agent splits, and it says you're not going to quote unquote steal our stuff because we're going to give you access to all of this information. Once we get that signed selling agreement in, we get your ILIA invite out right away. So you can just reach out to your contact there at NFI for that. Ultimately, like I said, what we are trying to do here is address the financial windfalls of what we feel the problem is not the product you're using or the return you're getting. Yes, that is a factor, but at the end of the day, we feel Americans are underfunding their retirement plans. They are going to retire, but they may not retire when they want to, or more importantly, at the standard of living they want to. So let's utilize a leveraging platform that puts some guardrails in place to make it safer for your client to utilize leveraging. So with that being said, I think we can open it up for any questions that anybody may have at this point.
Yes, absolutely. Folks, if you have any questions, feel free to send them to the Q&A, and I will read them off here for Jeremy. We do have a couple. Is there a min or a max age for contributions?
Absolutely, great question. So technically, it is ages 18 to 65. However, the wheelhouse is really 35 to 55. Typically these carriers have guidelines. I mentioned National Life and Allianz. So typically you're talking about clients with above 150,000 of household income. So you don't always see a lot of that in clients in their 20s. Of course, we will go all the way down to that. But the reason I say 35 to 60 or 55 is younger clients don't always have that the accumulated wealth or the income or the discretionary income to fund these things from that standpoint. And then when you get to older clients, they have to wait 15 years before they can start income. So you're going to defer for 15 years. We're going to pay the lender back, and then you can start an income stream. So with that being said, ages 35 to 55 is typically where we see, with our average age being right around age 46, I think what we see on these. So great question.
Awesome. I did get another question here. Is there an option for somebody who is 68?
Unfortunately, no. It's a good question, and two problems with that. Number one, the costs involved at that age are just, when we are, as I mentioned, adding risk. The costs are just higher, and it's tougher to pass the stress testing. We wouldn't be able to leverage very much safely. So that's number one. And number two, remember, you do wait. There's a 15-year deferral. So if you're talking about a 68-year-old, you're talking about somebody well into their 80s before they could start an income stream. So typically 35 to 55 is where we typically see these. Some protection focused above age 55, but primarily because of the weight and where we're at, that's where it's at. So great question.
Absolutely. What happens if the client dies before 5-year premiums complete?
Yeah, great question. So let me do this. And I should have had this up, but I'm real quickly because it's a very, very good question I'm going to pull a design up. One second. Sorry about that. Actually, let me go here. Let's go here, the design. So let's just say the client dies in year 2. So this client put in 40,000. We leverage 36. The client puts in 40. We leverage 36. And then the client passes away. So if I go over here to column I on the far right, the actual death benefit in the policy is 1.4. So the first amount of the death benefit has to go to pay the bank back. So if I look here at column E, there's roughly 79,000 of bank loans. So the first $79,000 goes to pay the bank back. Column J is ultimately your net amount. So in this case, 1.359 roughly would go. So really the short answer to the question is the balance of the bank loan first has to be paid back. And then whoever is the listed beneficiaries of that policy of the client's trust is who gets that. So in this case, 1.4 million death benefit, roughly 70,000 goes to the bank, the balance 1.3 and change. So great question.
Absolutely. We've got a few more rolling in here. Can a parent buy a policy for a child who does not have the income needed?
Great question. Very, very good question. So let me first talk about the age of the child. If the child is under 18, unfortunately, no, because the trust has to be set up and that individual you cannot be the settler of a trust if you are under 18. So if you're talking about juvenile kids, no. But let's talk about a scenario where you have, let's say, a 20, a 25, even a 30-year-old that may not qualify for Kaizen on their own. We do have, it's called the Great Wealth Transfer. It is a gifting package for, let's talk about mom and dad, generation one, let's call it. If generation one has above a 3 million net worth and they're talking about gifting, they could gift the Kaizen premiums to an adult child who would not typically qualify on their own. So yes, there is a specific platform for that. There is rules and guidelines, and I could certainly provide that to the folks at NFI so they can disseminate that to anybody asking. But yes, the main thing is if it is an adult child above 18 who would not qualify on their own, if mom and dad have above 3 million net worth, then yes, there is a gifting platform. Very good question.
All righty. Awesome. Thank you. Next one here. Do you do any where the client is focused on just the death benefit and not the income, leverage dollars for the most death benefit to leave a large estate?
Yeah, it's a small percentage of our sales, but what you would see is it would look very similar, but you wouldn't see an income stream here. The client would still pay 5 years. We would leverage 3-to-1 on top of that. We would still use the cash value of the policy to pay the bank back. But then what we would do is we would just leave the thing alone and let the death benefit grow after that. So by the time you get out to roughly mortality, the leveraging makes sense and it's still providing death benefit. So it's a smaller portion of our sales. But yes, it can be because ultimately there's still a ton of cash in the policy. If the client maybe they're not planning on an income stream, but they would like to randomly access a tax-free bucket, if you will. So the leveraging is still compelling, just a smaller percentage of our sales, but we do see it.
Awesome. Next one here is, does the agent need to be licensed in Nevada?
Great question. Yes. And I should have mentioned that. So I mentioned that it is a Nevada trust and a Nevada trustee, which makes it a Nevada sale. So let's say you're a Minnesota agent selling a Minnesota client, you need your Nevada non-res, and you would want to do that prior to sending a client invite out of ILIA, because if a client gets your invite that you sent them and they do go in and click through and enroll, that becomes a live app at the carrier. So very, very good question. I apologize for not specifying that. But anybody that has done this, you can go out to Nipper. You pay the fee, I don't know, $100 or so, whatever it is. And typically inside of a day or two, you've got your Nevada non-res. But yes, you need that. And that's the carrier guidelines, by the way, everyone. That's not our guide. That's just NAIC. It's a Nevada sale. So because it's a Nevada trust with a Nevada trustee, it is a Nevada sale. Very, very good question.
Awesome. A few more here. We've got a time for a few more here. What if a client has less than 200K annual income, but a large non-qualified account that they want to transfer to this concept over 5 years?
Yeah, it's ultimately very, very good question. So at the end of the day, it's the carrier's guidelines, not ours. So we would say, for example, the carriers have guidelines that start around 100,000 of income. And then they'll use a strategy like a combined income and net worth. So if you have somebody that, especially if they make above 100 grand and there's maybe a windfall, they've got a ton of liquidity, it would probably just end up being how much of that liquidity are you ultimately going to use? It's really the short answer would be, I would reach out to the carrier, tell them, speak to an underwriter, tell them specifically you want to utilize this strategy for Kaizen, say this is the situation. And they would tell you. But yes, it is possible. Shouldn't be any issues. It would be more along the lines of where's their income at and how much of that liquid net worth would you be using? Because we always stop just shy of speaking for the underwriter at the carrier, but ultimately they're not going to want somebody to use their whole liquid net worth to fund one of these or fund insurance in general, right? So definitely is possible. We see it happening. It's just situational depending on what that client's narrative may be.
Excellent. Is it always a 5 to 10 year ratio for the client bank contribution, or can those years be adjusted?
Great question. Unfortunately, no. It's as flexible as this plan is and what it provides. That is something that does not change. Your client is going to go into it saying, I want to pay X amount for 5 years. And by the way, in case this may get asked, or just preemptively, the minimums start depending on your age around 21 grand. As you get older, they go up. So your client's going to say, I can pay X amount for 5 years. Based on that 5 years, we will leverage what we can over the next 10. So that is something that is static on all Kaizen policies. The client is going to pay 5 years, and we're going to ultimately leverage what we can over the next 10. So that part is rigid.
Awesome. And then how are the Kaizen advisors protected if they use social media to market the idea from a non-Kaizen advisor?
Well, first and foremost, what you would do, so yeah, I think what the agent is asking, it's a very, very good question. And some of this is just the interest of time where I didn't have time to go through everything. But so let's say I go out there as an agent and we have all these news and social posts here, and you take one of our content pieces and you go out there and you just say, hey, and a client likes it. You're absolutely correct. And it is a very astute question, which I appreciate. Well, how do they know that it's me? What if what are they going to do? So here's what you would do. Every agent that has one of these will have agent links in here. These links will be specific to you. So let's just say I am going to be doing some marketing and I'm going to post a video. I'm going to post any of these things out here. I am going to put at the bottom of that, for more information, click here, or to estimate your benefits, click here. I can copy this link and I can put that on anything I post. So let's just say I posted a video, and then at the bottom of that, I put, to estimate your benefits today, click here. Here's what it looks like. If the client clicks, they will go into a platform. You see at the bottom right here, it'll have your contact information, the agent. Here's what's even more important, this is where it gets fun, is if the client would actually go in and put their name or email here, if they input any personal information, this platform will ping you and it will then show up in your lead management. So very, very good question. So ultimately, anytime you're going to use our content or use our videos or any of our social posts, you're going to want to create a deliverable, and that deliverable is going to be your individual link. So it's just more power of the platform. And some of this stuff you don't proactively go through in the front end interest of time. So I love that question. But yes, there's your answer, is you're going to just post your link saying that drives it to you. And then that way, if for it to show up in your leads now, the client will have to put at least basic information in, like their email or what have you, but at least it is going to tie to you, and it'll go into your individual ILIA account. Very, very good question. Love it.
Excellent. And last question we have time for today are there plans for additional carriers, or what is it about Allianz and National Life that you guys are drawn to?
Absolutely. Love that question. First and foremost, yes, we are constantly in conversations, especially how this has blown up with ILIA over the last 3 to 5 years. We hope to increase that. We are utilizing the two right now, and it is not because we're golf buddies with them, or more importantly, not because we have anything against other carriers. We don't. When you agree to utilize this platform, Kaizen, more importantly, it is not just the carrier checking a box. They have to interface with ILIA, so their systems have to be able to work with our systems. And most importantly, their product has to work. I brought up those stress tests a couple times now, 1980s and Great Depression. We have to be able to go in and manipulate that product to be able to pass that. So our designs are much more complicated than just a straight minimum option B switching to A. So that is ultimately the biggest reason why it's the carrier has to have the systems internally to interface, and they have to have a product that has certain riders and cost mitigations that allow us to come in even after year 10 and do those mitigations to make it be able to pass those stress tests. So while we may love a few carriers and some very, very well-known carriers, they may just not have a product that currently works. But we certainly hope to increase that in the coming months and in years here. It's just some carriers have even told us, look, between the new product and the system integration, it may take us a year. So very, very good question. We just, that's a moving target at this point that we are still working on diligently.
Well, awesome. Thank you so much. And it looks like we are out of time today, folks. Thank you once again for being a part of today's webinar. We look forward to connecting with you soon and helping you unlock the full potential of your endeavors. Until then, stay inspired, empowered, and strive for greatness. Goodbye for now, and remember that with NFI Solutions, your success is not just a destination, but it's a journey that we're excited to take with you. Get started on your journey today and call 952-887-1239. Thank you so much for your time today, Jeremy. We really appreciate it.
You're very welcome, and thank you, everybody. Take care.